Yeah, we had Janet Yellen come out yesterday with December being a live possibility. That was backed up by President Lockhart today. That it looks like December is on the table. So what does that mean for the economy? What does that mean for the financial markets? And I think it's how they frame it. I think that the investors will see it as a vote of confidence for the economy. So if it's framed well, the data does support it, then the market can continue to move forward, and it could actually add confidence in terms of the U.S. economy overall.
Okay, so if it's framed well, what sectors do you currently like, and what will you continue to be long in?
Well, we still like growth. We like one broad way to play that is the NASDAQ 100. Just hit a new all-time high this week in the U.S. market. The NASDAQ 100, the big cap tech names. We like biotechnology that had some headline risk here recently and has rallied over the past couple of weeks very strongly on improving fundamentals. Good earnings reports coming out from some of the companies like Amgen, Biogen, Gilead had really good blowout earnings.
Yeah, and in fact, you're very bullish on biotech, but today we saw some of that get hit, like Celgene, for example, is down by more than 5%. Part of this is because of the pressure the executives are on in terms of drug pricing. But do you worry that some of this pressure that these companies are coming under, at least from the political front and from the public image front, is going to weigh on investor sentiment?
Well, I think it's important to recognize the two senators who are looking into drug pricing, what they're looking at. I think everybody can agree that the drug companies need funding to research and solve and to treat and cure chronic diseases, not only to treat hepatitis C, for instance, but to cure it. And I think everyone agrees that dollars for that makes sense. I think what they're looking into and what certainly anyone can have a problem with is when a generic drug, the price is raised just because that drug company can raise the price, and not necessarily to support research. So, in that regard, if that's where they're impacting drug pricing, that has little impact relative to the overall pricing complex in pharmaceuticals and biotech.
David, let's look beyond borders and look at China right now, because it closed up another 1.8% yesterday. Technically, with that gain and then the 4.3% gain from the previous session, that puts the Shanghai Composite in bull market territory. This is quite a different story from what we saw back in late August. What's your view in terms of China? I know you're quite cautious on it. Tell us why you're so cautious and why you're putting up so many red flags.
Well, we've been on a bit of a roller coaster ride, to say the least. Up over 151% in less than a year, then down 41% to that August 26th low. Yes, we are in a technical bull market with this bounce back of more than 20%. But our concern is when we look now at the Chinese economy and we look at the Chinese stock market. First, the economy. We have an economy that was growing at 14% several years ago, down to 6.9% in the latest quarter GDP reading. The government's come out and said they'll grow at least 6.5% over the next 5 years. We'll see. And when it comes to the stock market, we want a stock market to be efficient. We want it to be a market between a buyer and a seller. There's been a lot of government intervention in the Chinese stock market, and that concerns us. That's an unknown as to how that will impact stock prices in the future.